Hi, this is Benjamin Day presenting the Market Peak real estate data for the Pikes Peak Association of Realtor MLS through April 30th, 2013. This is the May edition, your standard disclosure, letting you know what I'm liable for and what I'm not. I'm not an appraiser, just a marketologist. Here's what's going on nationwide. Case-Shiller Index is up about 9%. It's recovered most of its losses since 2000, all the way back to 2003, and is steadily going up on the 20-city composite and the 10-city composite. What's going on in the local Colorado Springs market, other than a summer or spring even that never seems to want to arrive? Well, we're at 3.6 months of inventory. That's as tight as the inventory has been in the last 20 years. Average sales price is up over 9% from a year ago. It's up already for the year 8%. It's a bottom-up recovery, though, because the median is up 13% compared to 1 year ago. It's higher than it was at any time in 2005 and higher than most of 2006. A lot of houses are under contract. If you're driving around, you're seeing for sale signs, it's gone. There's almost as good a chance that the house that you see with a for sale sign in front of it is under contract or pending as it is actively available. There's about 3,400 actively available houses today, May 15th, and there are close to 2,200 pending and under contracts today. Then here's the nitro in the tank. This is what's making everything move. 3.5% interest rates. When you've got prices going up, you have low inventory, you have a pent-up demand of people entering the marketplace. When the interest is very close to the rate of inflation, that gets people interested. So, quick comparison. Pendings, there's lots of them. Almost 50% more than there were in 2009. If you're looking at what's happened over the last 6 years in relationship between supply, the red line, and demand, the blue lines, supply has come down and demand has gone back up to where it was in about 2007. If you look at that on the short curve and where it's been for the last 30 months, you'll see, excuse me, this trend that we've been establishing for the last year, that it's been a market of correction in 2011, a market of traction in 2012, and a market that's poised for appreciation in 2013. It's no longer poised, it's happening. Quick comparison of the actives, pendings, and solds for the last 5 years. And again, what you can see is that there's just about the same number of houses for sale now as there were last year at this time. Denver, for instance, is down 30% in inventory compared to 1 year ago. We're fairly steady with where we were 1 year ago. We're just at a 13-year low. You've got to go back to the year 2000 to find fewer houses for sale. And at that time, there were close to 100,000 fewer residents in the Pikes Peak region. Months of inventory, puny. Same as it was in 2005. That's the lowest measuring stick that we've seen on May 1st ever. Pricing trends, what you can see again is that median, the dark red line compared to the average orange line, is going up faster than average sales price. It's going up and it's going up quickly, but the average sales price is going up on a healthy clip. Now, if we look at this based on the last 18 months worth of activity, something that you can see that could derail some of the market improvements is that the average asking price is going up too fast. You can see that it's pulling away at a much faster rate for calendar year 2013 than the gains that we've seen in average price and median price. Just today I saw one house that was $50,000 overpriced and another one in the same neighborhood $100,000 overpriced. When you're looking at 4 houses and 2 of them are overpriced by 10 and 20%, that's a little discouraging, and buyers won't act and won't commit to ridiculous real estate values. People are buying new, and the reason that they're buying new is because the houses are more in tune with today's desires for buyers. The floor plans have changed pretty dramatically. They're more energy efficient. They're more durable with the sorts of materials and standard inclusions that they're putting into them. And so we saw the highest number of single-family permits in 61 months last month. And finally, we'll leave you with a breakdown here as to what's going on with individual MLS areas. 6 months of inventory is considered a balanced market. We've been talking about 3.5 and 3.6 months of inventory. Well, what you see right here is that most of the MLS areas are less than 3.5 months. The only 2 outliers here are Tri-Lakes and Woodland Park, which are both close to 6 months. But then in Tri-Lakes, you have close to a $400,000 average sales price, almost twice what the market-wide average is. The market is healthy in most places. If you do see a properly priced property, be prepared to act on it in an hour or two. Thanks.